I'd like to kind of wind back the clock a little bit, and just kind of look at, because what we'd love to do on More Than Profit is really look at the stories behind the strategies. And so you are an amazing person who's done a lot with Oxfam in a previous job, and then even before that. But I think going back to your earliest days, kind of growing up, what was it like for you? What did that look like? How did you go from, a young girl, growing up kind of with just kind of two parents that I think, as I've done research, that that created a home life that was great, but at the same time, it wasn't like you came from money. I think sometimes when people look at fund managers or people that are doing unbelievable things and leveraging capital, that they just assume that there's this story of kind of inherited wealth. And I do think that exists, but I think in your circumstance, that wasn't the case. And so what were your early days like, and how did you go from that to where you are today?
Well, I grew up in Ohio, outside of Cleveland, out in the countryside. And the house that I lived in outside of Cleveland was built because I was born and my parents already had three boys. And so they were living in one of those tiny houses that after World War II, you could get financing to build a house. So they had built one of those houses closer to downtown Cleveland where they had grown up. And then when I was born, I was like, no, there's no more room. So they went out farther and they found a place that they could build something economically. And growing up as a little kid, it was nirvana for me, because in back of that house, because they were just cutting out developments. And in back of our house was a gigantic forest. And I was a total tomboy. So I was out there mucking around and climbing trees. And if my three brothers were driving me crazy, I'd just take my book and go climb a tree and read for hours up there. But in any case, that was kind of the idyllic thing, that kind of post-war narrative of happy families and housewives and all that stuff. That was my start. That was the base. And then the base all blew up because in the early 60s, there was a really big recession. And my dad was working at US Steel, and they decided to merge with another company, and he was on the marketing side, and they were doing all this cost cutting, so he was fired. So now we have an unemployed dad and a housewife mom. When I say housewife, I just mean that in regards to her not having a paying job. But all that time she was raising us. She was president of the Florence Crittenden's Home for Unwed Mothers, so she was really active on that. She and my father were adamant that every Saturday we drove back into Cleveland and all of us went to the Cleveland Music Settlement for music lessons, because that was an integrated space that had been started up to serve low-income immigrants who came into Cleveland, and they wanted this kind of education. So they gave me the gift of hanging around kids my own age with every skin color and every language. And that was awesome. So all of that upbringing was in that early years was really solid, creating a really solid base and constantly reminding you of what your values are. So with this recession having taken place, and my dad he was not finding a job. He was really looking hard, and he actually left home for about 9 months to come east and look for a job, because there were some relatives that had ideas that maybe he could, get in for an interview or whatever. So my mother was left at home. She just started to work at the department store in the knitting and notions section. So, just because we had to have a job, we had to have income. And finally, when my dad got settled, we moved to New York. We had equity in the house, which enabled us to buy a house in, we could figure out a house where the economics could work. And they were smart enough to pick one of the best school systems in the United States. And they found one of the least expensive houses.
Now, was that intentional?
Oh yeah. Oh yeah.
Yeah.
Because they couldn't have afforded. It was definitely intentional on the education. They,
Yeah. No, that's what I'm.
yes, absolutely. Nobody was going to be going to private school for us.
Mm,
And so it was brilliant what they did. But for me, growing up in that environment, all of my friends' families had jillions of dollars.
mm,
I loved spending time at my friends' houses because they had snacks that, you know, were non-essential.
sure.
Like,
Yeah.
give me those Doritos, give me that, whatever.
No
So,
doubt.
and so that was kind of this gift that I had of fantastic education when we moved. So that move east out of a lot of turmoil for the family turned out to be a really good decision. And then beyond that, if you graduate from one of the best high schools in America, then it helps you get into college. So there was only one place I wanted to go. I only applied to Smith College in Massachusetts. I wanted
Why is that? I'm just
I
curious.
wanted to go to a women's college, and I also loved the campus. It's a beautiful place. And so, when you go to a women's college, all the jobs are for women. So if you're at a co-ed college, then maybe there's a 50-50 chance that you are in charge of the radio programs on campus or the newspaper on campus or the fill in the blank, all the things that students take leadership in.
Mm,
So if you were lucky, which I'm sure you weren't back in those days at co-ed colleges, it wasn't 50-50 women and guys on campus getting those roles. But you knew if you went to Smith College, you had a shot at any of those roles.
that's interesting.
So I found that academically, it was fantastic. It was
Yeah.
a beautiful place to live. The one challenge for me, frankly, was fitting in socially, because most of the women that were there were not on scholarship. And so I'd be sitting at the dinner table. Here was my vision of Smith College. All these smart women, which they are, and that you'd be working on your paper with them at night around a table with a bottle of tequila in the middle of the table, and you got your typewriter and you're writing and you're getting stuck, and you ask your girlfriend, where should I go from here? No, no, that did not happen. What happened around the table was discussions about, where are we going to go this weekend? Are we going to go to Amherst? Are we going to go to Dartmouth to see the guys? Are we going to go to Harvard for the weekend? And I'm thinking all the time, I know where I'll be this weekend because
Mm,
I'm working on campus as part of my scholarship. So I was working back in the kitchen while they were eating, So it was, and I know that the Black women who went to Smith College had their own feelings of alienation, but I was white, so I couldn't even sign up for that club. I
yeah.
was kind of in this in between. And
Mm,
one of the high spots for me at that time was I actually made friends with Yolanda King. So she was like the bridge to
wow.
another group of people that didn't feel totally comfortable there. But
Mm,
the education was fantastic. The professors were awesome. And it's because of Smith College that the companies wanted to recruit women. By then this would have been 76. And so they had actually said, oh, we should send recruiters out around and see if we can hire some smart women. So
that's interesting. Like, it's helpful to hear because I wasn't going to go in this direction quite yet, but your experience in Smith, I've got to believe, has driven some of your understanding of philanthropy. Because as I've done some research for this podcast, some of the things that you and your husband, but probably more driven by you, have focused on is really helping some of those underserved people in their experiences at college and in other ways, whether that's Oxfam or whatever. So how has that shaped some of your philanthropy? What do you find yourself drawn towards given kind of your own experience?
Well, for me, it's one of the biggest chunks of what we do. As you're right, you've done the research and you're seeing it. And George went to graduate school at UC Berkeley. When we got married, I moved. He was on the West Coast. I was on the East Coast. So I moved west. And I had been on the Smith board, but then that became more complicated. So I turned my focus to what was going on at UC Berkeley, and there is so much opportunity for philanthropy focused at a first-rate public university like that. I know that Smith College is going to be fine because a lot of those graduates, either they married money or they earned it themselves and they kept it. And now in their older years, they are sending it back out the door. So they're quite generous for Smith. And, I continue to support Smith, but Smith has these other people. UC Berkeley is in a terrible financial condition now. The state really cut back on the funding for that university for reasons I don't understand. And so they are operating in a deficit, and then COVID comes along. So our focus at UC Berkeley was particularly a notion of supporting transfer students into Berkeley. And this is where my husband and I both come out of the investment business. So we are always trying to think about, okay, we want to identify an entity that's worth funding and, can have a lot of impact. So how are we going to structure it? How can we get the most impact for the investment that we make? And so in this case, we started a program a lot of years ago called the Miller Scholars. And what it involves is transfer students that have been in the UC system at, junior colleges, basically within the UC system, and that their credits are accepted automatically if they transfer into UC Berkeley. Wow. So they can come in as juniors and spend their second 2 years at UC Berkeley, and they graduate with a UC Berkeley diploma, which means a lot.
It's huge.
They get a good education, and they get to graduate in 2 years. And so as we were thinking this through, we're thinking, well, there's so many good aspects to this. It's good for Cal because they need more diversification. And it's good for throughput. We're talking about throughput. So if 2 really good years at Cal get them settled in, maybe they'll go on and stay at Cal and get a scholarship for a graduate, additional thing. But they leave even if they don't, stay at Cal for further advanced education, they leave really strong. So, and if you're focused on, it wasn't a focus just on like we want to have African American students. The criteria was you had to be poor, you had to work hard, you had to show that you'd been working hard, and that you wanted to do something with your life that mattered.
Yeah.
So we've got hundreds of them now, and normally we do reunions in person, but
sure,
COVID not happening this year. But we literally have Miller scholars who were coming to the dinners in prior years, and they'd have a young daughter with them, so who is going to be a Miller scholar. So we're getting generational change.
That's great.
So on the academic side, that is our focus. And it does come back to the notion that George went on a full scholarship to Penn and had to work, as I did, all the way through college. So on this one, we're absolutely aligned about if you're willing to go to college and work hard, we are there for you. So
that's awesome.
Oh, so one other thing, sorry, because I'm running on too long, but the Cal has these events with donors and students. And so we have gone to a couple of them, and in one case, so they're in this room with the donors and the kid and the younger folks, and there are lots of people surrounding me and George, and some lady comes up to George on the side and says, "So what is that about?" And George said, "Well, these are Miller scholars, and we're hanging out with them." And she kind of looked and she said, we've given a bequest for, scholarships for people who need them. And George said, well, you can't get to meet your scholars if you're dead. You don't get the fun of it. You don't get the fun of hanging out with your scholars if you're dead. So
Yeah, that's a
I
good point.
I hope that some of the bequest stuff people should think about that
Yeah, do it.
get the
Be a living donor. Be
plan.
be active participants in the change,
Yeah.
and
And get
and then you're going to be motivated by that too. So
exactly. And just admit that you enjoy it, that it's a good thing.
yeah.
It's
Well, and that's helpful. Like you said, you were going long on that subject, but I think that's great because honestly, the purpose of this podcast on some levels is to really peel back the onion, so to speak, and really see the purpose that drives people to create really amazing change in the world. And so I think, your life story is part of the formation of Advanced Global. And so I think, how did you go from Smith, getting an undergraduate degree in history and a Fulbright scholar into the world of finance? You said investments, but not just investments. Like you weren't a wealth advisor. You weren't, which is not a bad thing. But I think you have been creating investment strategies. Like you've been doing that for a very long time, and you've built an unbelievable strategy to support people across the globe while also getting finance. So how did that bridge occur for you? What did that look like?
so I don't know if you remember or if they still ask this question of folks your age, but in my age, they would say, where do you envision yourself being in 5 years? And it was like, I don't know. Yeah. And by the way, my head of the history department, when I went off to go on the Fulbright at the end of my time at Smith, he advised the history majors that were graduating that they better really go out and look for a job because it's going to be really hard with a history major. You're kind of like, now you're telling me that, right? So
it's a little late.
but in fact, it's false. So again, so Camus said that good luck is getting the answer without asking the question. And so the example I'll give you is that there were lots of job recruiters that came to Smith who were at that time looking to try to bring women into their companies, corporates. They were trying to do something good. I had the good fortune to sign up. I didn't know what any of these jobs were, none of them. So I signed up for an interview with somebody from International Paper Company, Jack McDonough, head of the finance department. And so he comes on campus and we're talking, and I said, look, why are you talking to me? I haven't, in my day, by the way, the women wanted to go work for law firms and consulting firms like McKinsey. That was the holy grail. I didn't want to do that. I didn't think I knew how to do that. I didn't know how to do it.
Mm-hmm.
Anyway, so Jack McDonough is asking me this stuff, and I'm saying, why are you even interviewing me? And he said, business isn't that complicated. If you hire smart people that are eager to learn, they'll figure it out. And he said, I've found that it's very, that women are very open to that, and we have, we're very women friendly. And so, yeah, if you're interested, I think you ought to take the job. It's like, yeah, the answer is yes. I don't know what that involves, and what it involves was crazy because my first job was to be working on foreign exchange hedging for asset liability management for the U.S. subsidiaries. So I went down to NYU at night and started going to business school to take just the classes I needed. I didn't care about the degree, just the classes I needed to go to work and know what the hell I was doing. And so that was the first one of getting the answer without asking the question. And the second one was what took me into the investment business, which was that the Capital Group had shares invested for their pension plan accounts in International Paper. And they met up with me to talk about the company. And then I went out west to talk to them and answer their questions about what was going on at the company. And then 2 weeks later, one of their senior people came to New York and called and said, could I come in and talk to you? And I said, sure. The price of boxes hasn't changed in 2 weeks, but if you want to come in, sure. So what he said was, this is awkward because we do manage IP's pension fund, but we have an opening for a paper and forest products analyst at Capital Group. Would you be interested, or would you, consider it? And again, I said, well, I grew up in a very poor family, low income family. We did not own stocks. They had life insurance policies. That was about it. But I would love to come out and you guys interview me. And if you think I can do the job, then I will give it a lot of thought. But honestly, I didn't know anything about the stock market. So that was the second thing. And then that job, International Paper Capital Group was a wonderful, wonderful place to work. It's way bigger now than it was when I was there. It was still big then, but now it's really big. But
well, what's interesting is I think one of the threads is this notion of curiosity. So obviously you're bright. Obviously you have a great personality that I think you probably walk into rooms and people are excited to talk to you. Like, some people, they don't struggle with some of those things, but I think your curiosity, the fact that you're willing and wanting and desiring to constantly learn. And I love the questions you're asking, like, well, if you think that I can do it, and you're just kind of like, almost putting it back on these organizations to kind of like, I'm willing to try and I'll give you my best. But at the end of the day, I'm kind of like open-handed with whether or not I do this or not, because I actually generally like what I'm doing already, but I'm curious, like let's try this. Which I think on some level is kind of carrying that forward. You did a lot of those things, got into investments, built a really solid career, and then you found yourself in Vietnam. And I think has been, what I've seen in some of my research at least was pretty pivotal, the work you did with Oxfam and then later Grameen. And there was one of the quotes that I think that I found in your Smith Alumni Quarterly once, where what moved you when you watched some of the stuff in Vietnam related to microfinance was the noticeable change in self-confidence and self-esteem among the women who had borrowed and repaid money. Yeah. It was less about the transaction itself, less about like the fact that they now had this money, but the self-confidence that brought. Right. Yeah. Can you talk to me a little bit about that? Because I think that's when I see kind of what you built Advanced Global Capital now after Oxfam even, there's an element there. So this idea of confidence, the transactional nature. It's not just a money exchange, but it's a transaction of value. And so for people in emerging markets, when they receive that, this boost that they receive, how did that go for you? The experience, I'm sure, was just profound.
Yeah, it really was. And I must say that our focus in microfinance has always been with women. There were some early days with early microfinance funds that were co-ed and with maybe more men than women in the funds. And some of those went bust. And so one of the lessons that I learned just from observing that was, I want to work with women in this financial area. I just.
Have you been able to pinpoint why that was for you? Like, and not necessarily for you personally wanting to work with women, but why some of the co-ed?
Yeah, well, first of all, it's still kind of the case. I don't want to be a pain in the neck about it, but if you're in a room with high-powered men, they tend to take up a lot of oxygen in the room. And I don't have any interest in going up against that. It's just,
that's awesome.
I'm one of those people that just kind of goes, oh, let me watch this. This is going to be funny. That's kind of my take. And, it's partly too, if you grow up with 3 other older brothers, I got no problem with men. I love them. I love my brothers. I know all their faults, their traits, their egos. There were some specific microfinance funds that we actually tracked, and one of them had been just men, and it did not work. And the Philippine man who launched the fund was really, it was a really hard thing for him because there were just all these defaults. So he came back from that experience, and we got to know him because he had started a little pilot program for microfinance in Vietnam. He's the one who started it. He was a consultant to Oxfam. That's how we met him. And he said, you know, I've had my experience with men in micro lending, and now I'm going forward. He actually mortgaged his house to stay in the game so that he could put some money in. And then Oxfam put money in. And he said, you know, I'm just going to go with women here and see how that works. So, which it's worked really well, because women just, they don't default. They take responsibility for those loans. They will do everything to pay back that loan. And,
Yeah, I've noticed that myself as well.
So I don't mean to be men bashing. That's not the point of it, but it's just culturally true, at least there. And
do you think some of that has to do with just historically? I mean, as the sense of like, and it's an innate entitlement where, you know, there's just an expectation that things are going to come my way because I'm a man. And I think what I've seen with women, and I have 4 daughters, just this, like, I'm not going to be the one to let this fail.
Yeah.
And so like, there's this almost like this preciousness to receiving that. Like, I have been entrusted with something and I'm not even going to take it if I don't think I can make it work. Number one. And number two, I'm going to do everything I can for the sake of not just myself, but for my community, for my sisterhood, to make sure this is successful.
Yeah, I'm sure that that's true. I agree with you. I think the other aspect is that maybe for men, when they are making an investment or putting their money in a particular institution, that's it's not that personal. It's business. And so
interesting.
If business is not going well, you can walk, right? I'm walking. I'm out of here. This is not working. That is not the mentality of women that I have encountered in lots of places, not just in emerging markets, but particularly there, because they have to hang together to stay strong.
That's a really good point.
It's so they cannot be individuals. I mean, they can't succeed as individuals. They need everybody's help. So if if one of the women who borrowed money just said, I'm not paying it back, that'd be anathema. That would be totally against their culture. The other women would be incredibly displeased. So it would hurt in the community. It's just, you're living in this community. So so we came back saying, you know, we're really gonna support women as much as we can, and you know, the men will get support too, but we're going to direct our funding that way.
So how did you go? You know, so on this season, your background, I could take an episode over each of the things that you've learned.
Yeah.
And so that's one of the travesties of just kind of trying to, but with Advanced Global Capital, I think you've built an unbelievable thing. And I think, you know, early on Oxfam, Grameen, there is a true kind of concessionary nature. Like, we're supporting microfinance, we're helping these women emerging markets. But that's not the case with kind of Advanced Global Capital. You've built a strategy. So talk to me about, you know, even on your website, it says the best way to reduce poverty is through sustained economic growth. And so, like, how we think about this fund that you've built, how did you build this, and why do you feel it's possible to get returns for your investors while also supporting these small and medium enterprises across the globe?
Yeah, that's a good question. Well, one of the things I looked at after microfinance had, you know, spent a good decade, because I was in this in the early days, so I spent at least 10 years focused on that. And then you get data, so that's interesting. And one of the things I saw was that I never thought microfinance was a silver bullet. You know, lend somebody $10, she gets a baby pig, and next thing you know, she's running her own brick factory in the village. I never thought that kind of thing was happening. But what I did see was that you didn't see a lot of women graduating from the informal economy to the formal economy. And my contention is that the folks that for many good reasons cannot graduate or haven't been able to yet, then what they should be receiving is really smart support in terms of strategies to help them, and also funding of smart strategies, grant making. So one of the things I learned at Oxfam when I was chair there is you got to think about the tool in the toolbox for the job you want to do. So if it's in this informal economy, you want to make sure that the programs are well structured, and the grant money, you want to hold accountable for the use of the grant money as if it was an investment in the rest of the world. But you don't do it in order to stop investing in them. It's a signal that something is not working. So look back at how you're developing that plan that you have that you're funding. So the question is, define what you're trying to focus on and make a change for the better in. And then what is the best tool in the toolbox for it? So my conclusion was that, frankly, microfinance in this more recent years kind of turned into a bit of a monster, because it got into that bigger, bigger, bigger. And then, hey, we can launch it on the stock exchange. And then we can do, so then what happened in a lot of cases? That women were getting a pitch for a loan from lots of different microfinance banks, and they overborrowed, just like people in the US take out too many credit cards and can't pay them back. And it was like, oh God, why don't you just stay in your lane? But so what I was looking at is, what kind of financing could I do, start a firm to do, which is in the formal economy, but that will include the women who are just out of the informal economy. So they've started their businesses, they're starting to get a track record, but guess what? And the business is good. That's the scenario. And the business is good. They're not all good. Nobody lots of people
Sure.
ideas that don't work. Okay, the business is good. Now there's my cat. Sorry.
I like it. That's great. I've got two of them.
Up on my lap. Anyway, so where does she get the financing to grow this business that looks good? Banks are not women friendly. And there's one there's a couple of basic reasons. One is just cultural, about who should be doing business. That hasn't changed as much as I would hope over the last decades. But the other one's very pragmatic. Women typically do not hold collateral to anything. They don't have a collateral on the house, so they got nothing there, or a car, or a piece of land. They got nothing. So why could they expect to go into a bank and ask for a business loan with no collateral? Who wants to deal with her? So then that took me down the rabbit hole of saying, well, there's other ways to do this where the woman wouldn't have to have collateral. And so let's go back to Mesopotamia, ancient Mesopotamia, where you had the initiation of factoring, of financing trade routes. A factor, that's just that odd word, just came from, it was a word for agent. And there were agents along the trade route. And as your goods got delivered along the trade route, you got paid out in performance. So agents were giving you money as you went along the way. So I thought, well, if a woman runs a business where she can sell her invoices, because the issue is, okay, I got the business, but now I've got to wait so many days to get paid. 60 days would be, lightning speed. In the old days, 30 days was more normal. Like when I started out in the investment business, corporates paid their bills in 30 days. Not anymore. They pay in 60. During this COVID, they've been paying in 90 or 120. So, yeah. But the point is that if she's got invoices from reputable buyers, customers of hers, they can be monetized. She can sell them at a discount to that financial intermediary, that factor. So she can get her cash up front, And then when the invoices are paid, the money goes back into that financial intermediary. So that's what, and they can haggle about what is the discount rate on the value of that invoice. So I thought, this is how you get over that hurdle, because she doesn't have to have collateral.
Yeah.
And the other thing that a factor does, which is very helpful, particularly for women-owned businesses, is, let's say the buyer of the stuff that she's made she's delivered it, it's all in good order, they're delaying the payment, she's upset. I'll tell you this, she does not go home to her husband and complain about it, because I'm talking about the low end of this business that's on the margin of informal, because he will say, that's why I told you not to do that business. He's not going to say, oh, how can we work on this? I'm sure I can help you. So what happens is that factoring company, that financial intermediary in the middle, if they're doing the job right for her as a client, they are calling up the buyer and saying, "What, you owe this money. What are you doing?" And they'll say, "Well, the color of the shirts were not right." Okay, well then I'll talk to her and we'll fix it and whatever. So that a good financial intermediary does that.
Yeah.
And does it on a commercial basis, which means that it can be sustained. So there are so many slots in this continuum that need to be in place. Some that should involve grant money is charitable grant money to support people that will go out and give these women businesses a business advice on startup. Use grant money for that.
For sure.
That's a great thing to do. And for people that have retired from the business and want to still be out there and they get it, send them out the door to help with these folks. So that was the concept initially. And then the question was simply, could you start a fund where you're lending money to these financial intermediaries, but with very strict conditions on the terms, and and a lot of clarity around the fact that you must, to the best of your ability, be focused on women-run or owned businesses. You can't be financing economic activity in any of the stuff that's, whether it's metals or mining or oil or gas or any of that stuff. So that we will not put our money in those things. And so part of the impact is not just with that small business, it's, can we help those intermediary factoring companies up their game? Because a lot of them are not that big themselves. And the banks do plenty of factoring, but they do it in the big arena. They're financing the oil and the gas and the this and the that.
Sure.
And we've seen recently a major blow up in that space with a company called, a guy named Greensill, who's now all over the papers. So if you see those articles and they're talking about trade finance, I just go like, oh God.
Well, and to your point, like the banks have historically focused on where there's collateral. And, and I think that's what I love about kind of what you're talking about. And kind of earlier in the podcast, you were just talking about this notion of a toolbox and making sure we're pulling out the right tool for the right job, so to speak. And you're not saying grants don't have a role, microfinance doesn't have a role, but and that those businesses don't matter. It's just that how do we create the right tools, or how do we identify the right tools to support them, to help them grow and scale, and recognize that there are still gaps. Like we can't, I think oftentimes when I talk to people, they just assume banks do all of that.
Yeah.
And there's just, and then they don't, because that's their own human experience, right? They can go in, they have credit, they can get a bank account, they can take out a loan. And I think they forget that most people don't have that experience. And
from again, what I really value the intersection of my Oxfam days as chair with all the years I spent in the investment business at Capital Group, because I went and called on all the big banks in the Philippines, or fill in the blank on the developing markets. they do not want to lend to anybody that is the least bit perhaps uncertain about the credit worthiness. So what they
Exactly.
want to do, if in its most the idyllic way for these banks, is that you bring the money in the door in the deposits, and then you go out and you put the money to work in as safe a thing as you can get, and you just earn the spread. So in the safe as you can get is the spectrum where it's not the thing that is most needed for financing by definition. So they're just trying to go out there and just not do something that's too far out there in terms of, what they view as the risk, even if it could be incredibly impactful if it was done well, whether it's an energy project or solar project or whatever. But really, where they wanted the sweet spot is just earn the spread. And I
Yeah.
thought, that's what it is. So don't look to the banks to be the solution.
Well, and the other thing with banks is, and I've talked about this before on a previous episode, but this is one of the unintended consequences of hyperconsolidation. We used to banks did do this, especially where there's regional relationships, because like they had to, because they couldn't sit back and just enjoy the spread. They actually had to get out and work with these businesses
And know
make sure
them.
that there's
Exactly.
and know
We
them.
know our factors. The folks that you may be reading about in the paper for the next X weeks, all it was to them was a transaction that got sliced and diced and securitized and put into funds, and people know God nothing about what is in there. That is
Exactly.
not. I have zero interest in. That is the casino. We did it with
That is the casino.
we did it with stocks. Now some folks have tried to do it with invoices. It makes me really ill to see that. But I just want to stay in the real economy with real financing that's needed, where, the grants just aren't, sufficient, and the real financing can be structured so it makes sense. So it works out for both the lender and the borrower.
So Janet, I'd love to keep talking, but I want to, kind of close with a question that I've been asking folks this episode specifically. I think, given your background and kind of all of the different ways that you've worked in this space and seen how microfinance works and doesn't work, how banking works and doesn't work, I'm really curious, because I think we're in this moment, at least in the media and in conferences and such, where people are talking about this idea of impact investing and ESG going mainstream. There's been this hope for a season, but I think there's this real moment where people are like, oh my gosh, we're almost there. We're getting there. And I think that's a good thing, because I think obviously we want to push towards broader adoption of people thinking and thoughtfully about how their money impacts people and communities. But there are always unintended consequences. So I think, from your perspective, in the work that you've done and how you're leading at Advanced Global and other things, what in this moment kind of gives you a pause as you think about that idea? And then what are you hopeful for? What are you, as you look to the future, where we are in 2021, coming out of COVID, coming out of kind of 4 years of crazy public policy, like what gives you hope for the future as we think about this integration of values and people really aligning money with purpose and really pursuing returns? I think that's the thing that we're trying to really hammer home here, is there are really smart people that care deeply and are trying their best to work with people in communities at the human level, while also returning profit to their LPs and their investors. And I think that's an important thing. So I'm curious what your perspective is.
Well, for starters, I think the LPs, that you get the outcomes that you deserve by who you choose as your LPs. You can create problems for yourself if it's not clear what the LPs really want. So, for example, when we launched AGC, when interest rates were higher back in the day, we had a rate of return range, and we were explaining that the invoices generally in the portfolio, the invoices were rolling on and rolling off and so on. And I made it really clear every time we talked to a potential new investor that this is not a cash machine. If that's what you think it is, that it's, very short-term financing, and it's liquid and so on. If that's what you're thinking, that is not a good fit for us, because that it's not of interest to me. And a lot of times cash machines do not work out too well, especially if there's a call on a fund. So I think what's really important is that the investors are clear about the rate of return. There's the rate of return you want, and then there's the rate of return that is realistic, and then there's the rate of return where you're saying, well, realistically, I could get this higher number, but the money's not going to be directed to the thing I'm trying to accomplish socially or economically for whatever the entities are. So I'm going to thread the needle. So maybe I'll take a somewhat lower expected return, because I think that the money put to work is going to have a really high impact return. So I think they just have to decide for themselves. I've been to so many conferences where it's a combination of venture capital people, and we're down at the boring end of the spectrum. And but everybody can want what they want, but you can't always get what you want. I think there was a band that that's
but I think that's helpful, because I think being honest with who you are, and then targeting people that also are aligned with that, like this idea of LP selection.
Alignment. If you're gonna have a fund, bring people in that are like-minded, because otherwise they will not be happy. And frankly, if something is at a super high rate of return, how much do people dig in to say, at whose cost? We got this return, but was it at anybody's cost? And sometimes maybe it isn't. Sometimes it's maybe just an awesome invention or a business model to do something that is just turned out to be really profitable. Great. Roll that money back in the business, do more of it, and so on. But if you're trying to get the rate of return you want off the backs of hardworking people that just, aren't going to generate that return, then you're just you're using the wrong tool in the toolbox.
Yeah.
I'd rather see this is what I do to get my returns, and hopefully you can sleep at night, those higher returns, and hopefully I can still sleep at night even though they're higher. And then some of this other stuff that has a reasonable return, but it's just maybe not as high as what you're looking for. So maybe sometimes you construct a portfolio that has both. And
and I think,
go do your grants think of that as another piece of your portfolio, but don't put it into way down the weighted return. Don't put a 0 in there for,
Yeah. And I think what you're highlighting is kind of the theme of this season, which is this idea of conscious construction. It's bring to the conversation everything you desire, both socially, environmentally, or whatever, what you care about, your values, who you are, what defines you, but then also what are the expectations of that capital?
Yeah.
And then with that, then construct something that works for you. And then, and then that way you're going to have aligned incentives. You're going to have the expectations that are clear. You're not going to go in and get frustrated because you expected an outsized return, but the fund was pursuing this. And it's like, you just got to have that conversation. I think.
Yeah. Sometimes it's just not a good fit.